Thank you, Faye. Welcome back. This session arguably could have gone first because it is about looking at the opportunities for applying technology from the customer, from the policyholder's point of view. And it wasn't first, it's third, but I think this could be arguably the most important session here because of the opportunity for not only doing our current business better, but looking for new services, new ways of delivering value to customers and policyholders that will enhance top-line growth. So listen carefully throughout these presentations, these comments for how these organizations, these individuals and these organizations are ultimately doing things that will drive their top line northward. Our chair is Nectaria Bessa from the Sinatariski Insurance Group in Greece. Immediately to her left is Thomas Oliver, who is the head of the sharing economy and emerging practices at MAIF in France. To his left, Andrea Pezzi from that great Italian insurer, Unipol, that has been doing some very innovative things down in Italy in recent years. And to Andrea's left, Alec Casteros from Thrivent, who's in charge of a good chunk of what Thrivent is doing in the digital area. And finally, to his left, Emma Logan, Transformation Director from Deloitte. And I love the title, Will Boss Baby Buy Insurance from You? We look forward to hearing more about what that question means. So, Nectaria, over to you.
So, hello everyone. I'm so happy to be here with you, and I feel honored to be part of such an amazing panel. So I will start with the basic assumption. Mutual insurance company is owned by policyholders and tend to know better than anyone else their customers' database. So we are placed with a natural advantage. With the use of advanced analytics and the big data, allow insurance companies to better understand the needs and preferences of their customers and therefore offer a more personalized service. They have long been focused on serving the needs and maintaining the trust of their members. So this is why we are here today, for presenting you a new framework of new tools, new technologies, and the holistic view of the customer. We will be taking a few questions from our audience to our panelists at the end of our presentation and during our presentation, so feel free to send us your questions. You will need your headphones for the next presentation, so get prepared. And at the end of the presentations, we will come up with a few, actually a couple of questions for you to vote. So we will start with Mr. Thomas Olivier. And you are going to present us about sharing economy and the way to new services.
Bonjour tout le monde. Donc, je vais...
Good afternoon. So, back to your headsets. And thanks to the interpreters, and the interpreters thank the speaker for his courtesy. That's very kind. So I've been asked to take part in this biennial conference. Thank you for having invited me along. I've come here to tell you more about what we're doing at MAIF as to the ways in which we explore the new ways of doing things, the new usage. The locomotive that we still use today is the collaborative economy, and I'm going to get down to the details straight afterwards. Now, what I'd like to start off by sharing a strong conviction we have, i.e., beyond paradigm shifts, different types of insurance that are coming to the fore, the transformation of a whole industry that we're witnessing, we also have to look at the emergence of personal aspirations, collective aspirations that are changing the ways we do things and that call into question what we do as insurance companies, because we are at our clients' side to try and protect them throughout their lifetime. And if their behavior changes, we too will have to change the way and we stand at their side. But this means that we are going to undergo a transformation as well, because we are employers and we employ people. People in their personal lives are affected by these changes. And at the end of the day, these new usages affect us in what we offer our clients, but also the way in which we work with our people, with our colleagues. So the new usages, there's a sort of symmetry. They exist out on the marketplace with our clients, but they also affect our work culture, our corporate culture. So 3 parts to my presentation: sharing our convictions, our strategic vision that we can have, the way we work on the marketplace. Then we'll talk about aspirations. And then I'll give you a few practical cases of what Maif is about with a couple of strange partners. We call them startups, but they teach us a great deal of new things. So that will be the last part of my presentation. So before we start, I like to take cover behind the founders of Maif. In 1934, they started by thinking about the way in which they were going to Uberize the insurance market and offer some collective product. But there's this new technology which is about to appear, which we need to use, and that was the advent of the telephone. So if our founders were in this room today, they probably would build the same kind of company, the same Maif, but with a blockchain. So they were already pioneers in those days. They accepted technology as a lever that will help them do away with customer dissatisfaction. These founders that came together in 1934 decided to come together to share risk. And by so doing, without knowing it, they'd already created some sort of collaborative insurance. And there's a link between this idea of saying, let's create a collective, a community to be stronger. United we stand, create an economic model which we could call mutualism. And with these convictions, I mean, when you look at the history of this company, history, solidarity, mutualism, and when we came up against these fantastic new startups that suggested we work together on community business, we thought there was a sort of link between the two. The link between people who set up an insurance company in 1934 and startup companies that are creating platforms in 2017 like BlaBlaCar, where you share your car. So it's important to remember our roots, where we come from. This is what I like to say is a sort of a joke. Maif is just a 1934 startup that has grown from strength to strength. But when we talk to startup people, they have the same problems: how to develop their business, how to communicate, how to reassure your customers at the time by saying, listen, we're offering something new, but trust us, it's going to work. And that finally is the challenge faced by platforms today. And at the other end of the day, startups are just businessmen and entrepreneurs like all the founders of our mutual companies, and that are trying to go about their business in a more meaningful way. Now, why does it affect the insurance sector, this new technologies? For a very simple reason indeed. Most of insurance companies, most of insurers have developed an industrial era where ownership was key. We were all owners. We owned our own car, and this obviously created a very interesting market in insurance terms, and this conditioned the way in which we set up our companies. They had to be robust, and we had to have very robust information services to manage key accounts, but spread over millions and millions of clients. So it had to be very robust. So once we say we're not going to insure a car, but a route, then it's the shared kilometre that's going to be insured and no longer the car. You can imagine another kind of market which is far more versatile, far more difficult to identify because this system, which we have developed and consolidated for so many years, suddenly is called into question and has become more agile so as to satisfy varied demands. And it's not really a problem, it's the challenge for today. And this is what has led to this societal change, a society built on this concept of the individual, of ownership, which has now become an economy and a society built on sharing and access. We talked about the access era. What is the access era? It's the need to use a service when I need it, and only then. And we realize that you buy a car because you want to move around, but today perhaps it might be more interested to take out a season ticket on a platform to move around. It's not quite the same thing. So what's interesting in the collaborative economy is that it's systemic. Not only insurance companies are affected, car manufacturers and refrigerator manufacturers are affected. Why are refrigerator manufacturers affected? Because in major conurbations with the change of behavior, people who work hard and who want to enjoy leisure time, their refrigerators are empty because they call on platforms which deliver ready-to-eat meals to their homes. So they don't need such big refrigerators. They need smaller refrigerators with tablets. They're going to become refrigeration Teslas because the manufacturers are adapting to this new form of usage. Now, if we are to adapt, if we want to work on access, on different kinds of access, this means that we need to call into question the way we do business, because before we did that, between the insurance company and the client, there was the marketing offering that we were putting out there, and that was enough to satisfy our clients and our society. Our relationship was based on a satisfaction to be able to give him what he needed when he wanted, and then to apply management rules derived from the product we'd sold to this client. Now, what's happening in the access era is that insurance companies have to have behind them a whole series of different kinds of offerings, products and services, and between them and the client, they need to be able to offer some sort of experience, which has to be adapted. We no longer talk about an offering. Experience would be the behavior of your managers, of your agents, the way in which your managers are going to use a toolbox to offer the right service at the right time to the right person. Let's go back to our car example. Today, when a MAIF member has a car accident and that he can't use his car anymore, if you apply management rules based on the contract, we'll say, Mr. Oliver, you're entitled to a replacement car. It'll get to you in 3 days' time as soon as you bring your car to the garage. I apply the conditions to apply to the offering, but I don't experience what the member is experiencing at that very point in time, the change of posture, of behavior, if we understand the usage, in how come this accident is upsetting you now. And then in the discussion, you'll understand that the customer had to travel 300 kilometers the next day, and to get a replacement car in 3 days' time or 1 month's time is no point. What he needs now is to be able to move tomorrow and travel 300 kilometers to where he was supposed to go the next day. That's what I mean by experience, simply because we understand the new usage. So I used a very simple example, that of the car, and it's true that what we've experienced at MAIF, we've discovered these new uses, this new territory, like a spiral based on what we are about. Car insurance, multi-risk insurance, house insurance, and then we've broadened our experience towards something which is totally unknown to MAIF, simply because the collaborative economy is everywhere. Sharing is everywhere. If you want to simplify what I mean by this, simply people who own are put into contact with people who need. And we have all sorts of things. You own knowledge. You know, you own experience. You own goods, a house, or a drill, or you own relationships, companies own production means, you own funding capabilities, and next to you there are lots of people who would be interested in borrowing part of this surplus capacity that you have, that you own, but that you don't use. And between the two, for this to work, you need trust. You need to build trust. And to use a dirty word in French, you have to, in fact, include reassurance, because that's what insurers are all about. We want to reassure. We're here to reassure by creating trust vis-à-vis risk. A bad event happens and then we reassure. This is a very passive way of doing things. With the new uses, we have a fantastic opportunity where we can create trust in a proactive relationship as far as risk is concerned. We tend to forget even what risk is about. We want to do something. And this is what's happening with new uses, is that insurance companies will be able to accompany the projects of their clients by reassuring them that the project will take off. It will happen because we're going to give them services, because we understand the new uses and the way to do things nowadays. Now, this sense of community is increasingly strong. It gets stronger and stronger, but that helps to develop trust amongst the members of this community. This sense of community is essential in the use of platforms. Why? Because they are to do with aspiration, and that's where I want to come to. I'm absolutely convinced that what is going to drive the needs, it's no longer the technological offer, it's the aspiration that we're going to help satisfy. I use an article from the Harvard Business Review, Ben and Company. This pyramid, this is a revisited pyramid. At the bottom of the aspiration pyramid, you've got functional aspirations. For instance, I need to be able to access a service straight away, right now. So we're going to look for the be able to save time, save money, and then we can go on to the on-demand. And what you see on platforms, let's take Uber, for instance. Uber, they're not at the top of the pyramid, at the bottom of the pyramid. They offer a great service right now, straight away, but they're not going to develop what we call self-transcendence. They're not going to affect the social impact. And what makes a community all about? Is that at the bottom or at the top of the pyramid, at the tip? It's right at the top. So you'll have new players, and that's right, because they're new markets. They're going to redesign their new offerings because of aspiration, because that's where the volume lies. And insurance companies need to come up with products with these new aspirations. And the Maif model is based on long-term loyalty. You become a member and you're a member for life. You have to feel that you belong to Maif. You're at home. So our offerings will have to be designed to satisfy the aspirations at the tip of the pyramid. How to give him hope, how to give him confidence, how we enable our members to be empowered, to exist, to accomplish their dreams thanks to the products and services we offer. And that has been understood. But I'd like to end by giving you an example as to the way in which we do our work. We take risks. We are explorers, and we test all sorts of things. And sometimes we try and forget what we were about in the past by coming out of our comfort zone to come up with new insurance policies. This is what I call the hybridization factor. What I'm trying to do with my team is to find startups that have the same DNA as we have at Maif and to mix up our genes to continue to exist in the up-and-coming world. So I'd like to talk to you about Charlotte de Villemeroy. She's the founder, the starter-upper of a car-sharing platform for people with disability. And one day she was very frustrated in her own aspirations because she couldn't attend the wedding of her bestie friend because she couldn't find a car to take her to the wedding. So Charlotte that day didn't say, I didn't find something to satisfy my need to find a car. What she experienced in terms of dissatisfaction, because I've got a disability, because nobody's thinking about me, I cannot achieve my objectives, I cannot attend the wedding of my bestie friend. So she decided to create a platform so as to solve this kind of problem for all those who have disabilities. So she created Willies. I'm going to design my service taking into consideration aspirations at the tip of this pyramid. So I am going to create a platform. I'm going to ask for an insurance product and service with the right assistance provided if, for instance, the vehicle is not forthcoming, for instance. So let's stay with Charlotte. So we insure these people. We have made a made-to-measure product. We never have any shelf products. And our people at Maïf are very happy to be able to use Willies as a replacement vehicle. If you're not a member of Willies, we can still use Willies to be able to get a replacement car. So what we've done with this startup, we do it with all sorts of other startups. That's the end of my allotted time, so I'll speed up even more. We've done this with several startups. We look at the aspirations we want to serve and what kind of startup we need to look for so as to be able to work together and solve the problem. With Yulu, they're involved in crowdfunding. We help solve the funding problems of associations that we insure. Mes Dépanneurs, they're a repair men startup. They have a platform and they send the repairman, the specialized repairman you need in the next 20 minutes. And we've been able to solve the problem of denial of service. Before, we would say we cannot take care of that problem. Problem led to dissatisfaction of clients. With Mes Dépanneurs, we now are able to solve that problem. I wanted to end with these key success factors that we have observed in our adventure. Obviously, the list is far from exhaustive. The first success factor is to change behavior. We've done away with this kind of condescendence that we feel vis-a-vis startups. We've tried to understand the ecosystem and be accepted by the ecosystem. We started off by that, and then we tried to become legitimate by developing small projects to be able to measure products improved our notoriety, and startups come along to us because they know that we exist. And to be able to work with startups, you have to find some sort of trade-off between risk-taking and what the startup is all about in terms of pricing. My PV colleague talked about this. We have tariff tables. We start off and then meet up every 3 months, open the books, the ledgers, and see whether we need to change the guarantees, increase the price, change something else with the startup so that there's a win-win solution for both. Then, to show that we're the best partner possible with the best solution possible, we want to adapt increasingly and get them to integrate them in our process. So that's what we do well at Maïf. And then finally, to develop strategic partnerships, we've even created an investment fund, Maïf Avenir, and when we share a common vision for the future, short-term, mid-term, long-term, then we invest in the startup. A few figures: we're ensuring 215 startups of collaborative economy in France. This represents between half and 2/3 of the market. Thanks for listening.
Thank you, Thomas. You can feel free to send us your questions during our presentations, of course. But I have a question for you, Thomas. Do you believe that all the consumers are mature enough to accept this new business model in your market?
J'en suis absolument convaincu.
I'm absolutely convinced that this is the case. We've observed this because we started off without knowing that we were into the sharing economy 10 years ago, and all the indicators that we've checked are on the up and up. So There is a flow of startups that contact us. The list is growing every day. But what's very interesting, we've conducted marketing surveys with our clients, and we've noted that in 2011, 2012, 2 consecutive surveys that our members were already using all these sharing platforms and collaborative platforms. So it's a risk and an opportunity. The risk was that if we didn't come up with anything, they would have gone perhaps to competing insurance companies. The opportunity is to say not only we're going to insure them, but we're going to offer them services. So at the end of the day, there's an increasing number of members who use these sharing platforms that we suggest, those of our partners, and that the partner communities are growing in an exponential fashion. And in closing, if you refer to a survey, that of PwC, it's been updated last year. The first version of the study mentioned a world market of 320 million euros, and now it's a $570 billion market. So the sharing economy is here, and it's up to us to prepare for the future by changing our pricing policies and be ready when we'll have these 570 billion euros to share out amongst each other.
Thank you so much. So next station, Italy, and I'm talking about Unipol's approach and Mr. Andrea Pezzi, exceeding insurance boundaries to be a better insurer. Andrea.
Yeah, thank you. Morning, everyone. In Unipol, we think that in order to be better, to improve as an insurer, we need to exceed our boundaries. I have to anticipate that we are different animal from our competitors. We are not global. We are big. We have 25% market share on motor insurance, but we are just in Italy. So we think that we need to play also with additional strength than those that can be found into the insurance market. So just to give you a flavor, Unipol Group is leading in terms of a number of black boxes installed on cars of our insured. We are close to 4 million now. And we started 15 years ago. And in doing that, we now have become better underwriter. We provide a better service, and we manage claims better. Better, meaning better service in settlement time has been decreased, and we all know that when you decrease settlement time, you also decrease costs, particularly in a market like the Italian market, where the legal lawyers' costs are particularly high. So going out of the boundary has proved to be success in the past, and we are aiming to replicate and to exceed the boundary consistently in the future. In order to do that, a couple of years ago has been established an innovation division in the group, not to move innovation from the other areas of the company, but to sort of make an extra step, an extra layer, to add an extra layer of innovation. Let me start, sorry, I left probably, I'm gonna, yeah, I can walk. Thank you. Let me start from a picture on the Italian market, which is probably similar to some of the markets of the Western world, clearly not similar to some other market in Asia. And we've heard some very interesting comments and thoughts of colleagues that work in India. Clearly, totally different market, different challenges, different opportunities. Where are we at the moment? Of course, life business, not profitable, because we all know that. In Italy, we are also in the stage of the cycle, of the negative cycles of motor, which has to do with competitiveness. Anyway, the two things come together. So good for us. We are really pushed to innovate because we need to fight a difficult market. Other comment, in Italy, digital is becoming something important in terms of relationship with people, but people still are very important in relationship with people. The other key trends, I think, are the same that we can see in the Western world. So, as I mentioned, most of customers are probably hybrid today. So, do expect to use mobile phones on Saturday, on Sunday, on Wednesday, at 3 o'clock, whenever they want, but do expect that when they need to speak with someone, someone is there for them. Technology, of course, well, I don't need to point out. I decided to put a number on number of black boxes in the Italian market. Italy is leading in terms of black boxes for insurer. Clearly, there is something that has to do with the market. Fraud is one of the issues, and lawyer's cost is one of the issues that has made this an opportunity, essentially. The competitive landscape is changing, and who are our competitors? If we focus on the motor market, it's difficult to say. Car producer, car manufacturer have taken a relevant part of the market. As we speak, about 10% of insurance premium go through car producer or car dealers, and in some cases, they are not even insurance premium. They are self-insured. And most of all, these premiums are not the third-party liability, are the other coverages, which are the coverages where usually insurer can make profits to balance with the service on third-party liability. So changing the landscape, changing the landscape, and demography. Demography is changing, and our country is becoming an older country, a country for older people. We know that we all use the health system in a specific stage of our life, from 65 years on. So we know that part of the welfare system as we know it would not be sustainable in our change of demography. So on one side, this is a big challenge, it is an issue. On the other side is something where probably we should, and we can try to provide answers to give a component of the answer for the future, let me say. Government and regulation is changing, we know, and regulation are becoming more strict. Okay, actually something that is there for everyone, as long as the rules are the same for everyone, regardless the area of business, because now we know that car producers have become our competitors. So if we are under the same rules, fair enough. I think we need to make sure that in this changing environment, there is not the opportunity for someone which comes from a different market to play with different rules and with different, and with impact on the final customer at the end. Okay, so probably a market which is similar to other markets in Western world. Who is Unipol? Couple of words. Unipol is a financial conglomerate with the main insurance, also banking, other business as well. The insurance company is called Unipol Sai, and it's got now, as I mentioned, about 25% of the market share on motor, but it's leading in P&C, and we do have life business as well. Agency network is the largest in Italy in terms of point of sale. And and you can see other numbers. In insurance, I mentioned health. Health is something that is not the largest component of insurance at the moment in Italy, but it's probably something that will become a relevant component. The group has got a specific brand that with specific skills and knowledge. Back to the first comment of exceeding insurance boundary, the way we manage health insurance is taking care of the health service process. So we don't act as a reimbursement, but we provide the service, and then we take care of the relationship with the provider, with the health provider, meaning we can establish quality standards, and we can establish a level of cost which is the same for everyone. So another area where we have decided to go out from traditional insurance boundary and then coming into insurance and say, okay, now we have learned how to do insurer better, how to be a better insurer. Said that in the last couple of years, innovation has been brought to a different standard. So another level, another layer. Here, I just want to mention a couple of words. part of the culture of the group is really to make it happen things. So have a vision and make it happen something in short term. In order to do that, there are a few things that we have decided to take into account. Well, first of all, of course, when you go out of your normal activities, when the distance is longer from the day-to-day activities, there is a risk of success. So we start from the beginning knowing that we will test a number of different opportunities, and hopefully, if you're good enough, some of them will become reality. If all of them become reality, probably we have not pushed the limit enough away from our standard zone. Anyway, scouting and networking is key, meaning we look essentially, of course, in Italy and in Europe, but Silicon Valley and Israel for us are areas where we consistently look at for good ideas and collaboration. So we don't think that we will be the one with the good ideas, but we know that somewhere in the world there will be someone with good ideas. And so we want to leverage and work with that. Agile prototyping, of course, on one side, big challenge, because we are a big animal. We are an elephant, and applying agile to an elephant is tough. So sometimes it's part of the elephant that becomes agile. Advanced analytics used everywhere, in every single initiative, even if, let me say, in the beginning it's not clear where to apply, but this is something that we have taken as a must and is paying dividends in every single initiative. As I said, we need to balance risk. So we don't look at a single initiative. Usually, if we have an area of some interest, we put in place a number of initiatives in that area. Said that, the area that we mainly look at are the area of new mobility, the area of health, as anticipated already. Housing and property is another area. And these three, if you like, go together with the digital telematics and robotics of particularly for internal processes. So we start from open innovation, looking into this ecosystem, and then we move to a number of initiatives. As we speak, we have about 20 initiatives in the insurance, the whole insurance area, which are running in the, as we call, pilot stage. So after the proof of concept, now it's real customer, it's real agents, it's real life somewhere, not all over our company. And out of which I've got a couple that I'm going to share with you. The first one is something we've been talking about. It's an app. It's a micro-insurance app on the go. It's interesting, and it's part of Unipol culture. We launched this app last Easter. I'll go through in a while, but it's easy to use, one click, 3 minutes, instant coverage. It costs from €1 to €15, and we launched it last Easter. But in the Unipol style, we did it end-to-end. We had decided not to communicate. Probably some of you may have heard that in June, so 2 months after, an MD of a large group from Silicon Valley announced we will be the first to launch microinsurance for travel on an app. Actually, from our perspective, too bad, 2 months later. You can say from a communication perspective, they did the work anyway. Anyway, we are happy with what we have. We've got this experience. And on this, I'll go quickly through the customer experience, but the customer experience is the one that probably you would expect. Very straightforward. You can do it on the airport or on the train station. Through the app, you communicate to the company where you are traveling to, how many days, then how many people, then the coverage selection is the one you see here on the back. It's very simple. The cost from €1 to €15 altogether. then some personal detail which are required because we sell contract, we know, but supported by the camera of the smartphone, essentially. So some of these information, the most complex information, are taken from the final customer via a camera. Of course, we have the privacy consensus and agreement. Then there is the signature via one-time password, so via an SMS message, and essentially in the payment, credit card, PayPal, and actually is done. The policy is done in altogether 3-5 minutes, depending on how much time for the customer to put his own information. The coverage is up and running. And one comment on this, sorry. Yeah, actually, of course, it's a challenge for a big animal to think in a straightforward way, but I have to say that the big challenge is to understand how to connect this thing to a traditional mainframe transactional world. Because when you look at this, you say, okay, let's give me your API. Bad enough, we do not have API. We have transaction, mainframe. How we do it? And actually, going through this process, we realized that there were a number of startups that were working in this direction, but none of them could help us, because that is something that we need to do our own. We need to understand how to connect this world to the world of our transactional business. And actually, there is a lot of creative solution to that, into that part that is not possible to show you up, because you should understand how our system is designed. And so we know that part of the challenge is to find ways, creative way, to design these connections. Last project, second project and last project I want to share with you, it's in the world of moving from possession to utilization. Mobility, of course, and let me say very first step into that new world from possession to utilization. Essentially what we have done is, at the moment our agency in Milan, or the city of Milan, we run a pilot first, and now we are in a rollout stage. Now our agency in Milan can sell a car together with the policy. Actually, it's not really selling, it's long-term rental, but it's very much similar to what we do with our smartphone. We have a smartphone, it's our smartphone, I don't know if I've paid for that, I'm paying on a monthly basis, I don't know anymore. I don't care, it's my smartphone. And in doing that, we had to take that market, the long-term rental market, and reverse it, change it upside down. That market is done with collective agreement, mainly on third-party liability, full stop. The rest is self-insured by car producer. And here we said no. We realized there were some limits. The customer is not fully protected. The customer loses the track of his claims history and has got limits and deductibles, which are not those who are really connected to a policy. So we said, let's reverse it, individual policies with all the coverages, and let me say, as if it was another coverage, we add the car. And we have got 20 cars which are ready in 30 days, and we can reach any kind of vehicles throughout agreement with the all car producer. In this arena, we have also tested a new way of communication, and this actually is a startup, which is fully designed for smartphone. And just 30 seconds to show you how it works. What you see is what a number of our customers received. Actually, is designed for a smartphone, so here we are mimicking a smartphone. It's a different communication. Talks more with emotions. The very first area, claims history, well, we are Italian. In Italy, claims history is called class. So it sounds good. It's good marketing on that. And so the first area talks about this class. You keep class if you select our solution. The rest, you can imagine, change your old car into a new car. And tapping on this, now I'm tapping on this, there is other information, which is still videos and other kind of information. And okay, I'm working with this kind of communication, which is totally different from the kind of communication that we used to have for insurance product. Actually, we realized that we help the customer to see us also under a different perspective. So, getting to conclusion, a couple of comments. As I anticipated, going behind traditional business boundary for us, I mentioned already, we are not global. We cannot leverage on other opportunities that global financial service may have, but going beyond boundaries for us is a key point. So also key points to increase touch point opportunities with customers, and we know that in this battle where it's difficult to understand who is the real competitor, increasing customer relationship is key. And the third point, not just increasing the number of touch points, but the quality of touch point is key. As an insurer, we have a relationship of a very high quality, but it is also in the arena of the emotion that is better to calm down. With other opportunities, we can leverage on positive emotions and say, for once, okay, we are the one that push up the emotion because it's part of creating a broader, a stronger relationship. Thank you.
Thank you. Thank you, Andrea. I was impressed of the key trends of Italian insurance market. So I have a question for you. What is the process for auditing the details given by the customer through the app as the policy is provided instantaneously?
Sorry, help me. Tell me again. I was drinking my coffee.
What is the process for auditing the details given by the customer through the app as the policy is provided instantaneously?
Okay. Actually, something that has got a cultural change, a cultural shift for us as an insurer. We are taking the information of a document for the customer sent via a smartphone. Mm-hmm. So, picture of the document, that's part of the contract, and that's it. Clearly, this does require a new mindset to look at the relationship with customer. Clearly, there is, the focus of insurance has been very much on starting from the perspective that the customer is going to cheat us, let me say. And so we wanted to create upfront a number. Of course, this trust relationship has to be built in a different way. And of course, we need to have very strong process on the back in the claims area, stronger than in the past.
Okay.
But the starting the relationship has to be probably, there is something that is, okay, I deliver to you more trust, and I expect from you a lot of trust.
Mm-hmm. So, thank you.
Okay.
After these two very useful approaches, Mr. Alec.
Après ces deux présentations, nous allons écouter Alec Katsouros, qui vient des États-Unis d'Amérique, Thrive and Financial. Vous nous expliquez comment la nouvelle donne financière est en train d'attirer les jeunes chrétiens, puisqu'il y a l'amour du numérique et le conseiller financier. Alors, je suis ravie de vous présenter ce que nous faisons dans ma société pour pouvoir attirer des jeunes chrétiens qui aiment le numérique et qui aiment les conseils financiers.
You'll hear how we're actually approaching different problems and figuring out new ways to engage potential members in new markets. So I work in the product management space. For those of you who don't know, we are a separately branded division of Thrivent Financial, and we help young Christian families grow stronger financially so they can live with confidence and generosity. And I wanted to start the journey with the why. So I think often we get caught up in technology and the how, but miss why we're doing this and the problems we're actually trying to solve for our potential members and members. And our problem really hasn't changed. We're helping young Christians feel more confident about their finances. So I think, as you can probably relate, that almost everybody at some point in their life worries a little bit about money and different problems, but this is startling. The fact that 1 in 4 of my peers in my country are actually physically ill because of stress around money. And I think that's a huge problem for our market, and we're trying to change that. And so we very much say that we're a confidence company, not an insurance company. So as we actually dug in over the last few years into meeting with our potential market, going into their houses, understanding their lives, and what causes maybe some of these outcomes where they don't feel confident about money, we uncovered something that we didn't expect. And that's really that when you're working with a young couple, someone that's just been married, expecting their first child, had their first child within a few years, that it's actually a lot more about relationships than just money. And what we say is that you can't help individuals with their finances unless you help them with their relationship, and you can't help them with the relationship unless you help them with their finances. They're just so intertwined. And think of that, this is a statistic from the US, that 88% of young couples say money causes problems in their relationship. And this causes a high level of divorce in our country. And that's really our objective, is to get that down to zero. And using technology and some of our products to actually help them along that journey. And so this is really the why and the guiding vision for what we do at Bright Peak Financial. And at the same time, I think Tuesday, we heard a lot about changing expectations of customers. And we actually look more at the broad set of brands and interactions that are influencing our market. And none of these should be very surprising, but for young millennials, the expectations have changed a lot. And there's a lot of brands that have driven that. So we know that the game has changed in how we need to come to market and how we develop new solutions. And we expect that every brand understands us and inspires us as Nike does. We expect that every product is going to look as sexy as an Apple product and be as easy to use. We expect that you can buy anything via one click and it'll be delivered to your door within an hour. We expect that every brand will understand us like Spotify does, using data to actually suggest music based upon my past behavior and third-party data that they go grab to create a very personalized experience for me that's ever getting better with their algorithms. We expect that we can learn anything via YouTube. 80% of millennial, and probably 100% to be honest, this is actually like the search engine. So if I'm looking to buy a product or learn something new, I'll go out and actually search YouTube. And you could search Google and flip over to videos, but that's where they're going. So if you're not creating content there, you're missing this part of the market. And the last is that we can reveal the truth. So the truth is out there about your company and whether or not you really actually do a good job. And online reviews have changed the game there, where if you have a bad experience, it's going to be out there. And if you have a good one, it's going to be out there as well. And we'll dig and discover what you're really about. And these brands have really changed the landscape. So our problem has stayed the same. And this is what influences young millennials in our market. And we have to keep that in mind when we're actually producing new experiences. Instead of talking about technology trends and things, I thought it would be best to give you a perspective of what we learned. And we found that we actually had to start by changing ourselves. And it's a lot more about people that need to change their mindset and continually do that in order to react to how technology, how your market's going to change in their needs. Because I think that we know it's going to change, and it's going to change faster. And this is really where we started. So this is actually a picture of our team. We are a separate location, and we are in a garage. I will say, unlike some other of the labs and startups that I've seen, this is an actual warehouse garage. It's actually kind of dirty. It has a real garage door, and we created the space. So one of the things that we do is own the space. Those are tables from Walmart. That art we actually created on the wall, and we take a lot of pride in using these things that we use to understand customers' needs. And we actually went around and observed each other working and created very minimum viable ways to improve our office, like a startup would do that had very limited funding. And it's exciting. It makes you, think of how you can use these very simple tools to achieve and solve issues even within your workplace. So what are the 3 things that we do to continue to change our mindset? The first is building an agile mindset. And yes, we look and feel more like a development shop now. I think 60% or 70% of our office is coders and data integrators and data scientists, which is a lot different than you'd probably see at many insurance companies. But really, it's not just about Scrum. So I think that a lot of companies, and we made this mistake, that it's, okay, we need to be agile, so we'll adopt Scrum. And that's a software method. But you really need to look at the entire organization and how you operate, because a lot of times you have this legacy planning. So if you're planning for 3 years and a year, oftentimes very little of that plan changes, which it should. And so one of the things that we're actually looking at and trying to use, and this has happened in Silicon Valley in the States, is OKRs, objectives and key results. So you plan on a shorter time frame, quarterly, and you have a very specific objective, no more than 3, and then you actually declare these are the results that we're trying to achieve. We want 2-point addition to our NPS score. We want to reduce the cycle time of issuance of our products by 2 days. And then you give that to a team, and they're very inspired, and they can figure out the how, which at any given time, the tools will change. So this has helped us dramatically really think about actually adopting and being agile. And there's almost nothing, there's no concept that we've come across that you probably couldn't build something out in a few weeks, even a technology, and put it out there. It might have a ton of bugs. It might not work very well, but you're going to learn something, and that's how you really find out what's valuable. Becoming fluent in technology, I think that all of these technologies are going to change, and they're really great tools to solve some of these customer problems, some of our business model problems. And this is an everybody thing. If you still have the business IT mindset, that's not going to work. We had that for a little while. We expect our marketers to be fluent in technology, our underwriters, everyone. And so this is changing the way you think. You should spend the majority of your time discovering some of these fintech companies, some of this insurtech that's out there. Start coding a little bit and just understanding, like, what's that? How does that feel? And it's been a really cool journey for me. I'm not a technologist by background, and I guess I am a technologist, but maybe still in training and forever in training. And then probably the biggest differentiator and investment we've made is what we call creative discipline. And this is really cool, and we've made it fun. So we prescribe to arts-based learning, and my wife always says that this is crazy. You come back and tell me you did something at work, and I don't understand why. But what we do is we actually go out and have and bring in painters, sculptors, dancers, musicians, and we learn from them. And I had very many eye-opening experiences where you often go to a museum and see a work of art, and like, wow, this person was brilliant, and they sat in a room and just painted this. And that's like thousands of iterations later. And there's so much discipline in the process of creating art. And there's so many skills and techniques that can be learned. A few of them, one of it's we call making to learn. It's one of our mottos. And don't plan, just go start creating. And you'll learn more, and you'll learn what your plan is through that creation. Just like an artist will have a blank canvas and start painting, just to understand what the brush feels like. And that's something that we practice all the time. Stepping away from the canvas, your business and your idea is going to look very different if you're viewing it from 2 inches versus 5 feet away. And you have to step back. So create something. And these are some of the skills that we actually, not only do we use in testing our ideas and our hypotheses and pushing each other, but we'll set aside time intentionally every week to actually practice these. Because it's something that if you don't use it, you lose it. And you need to always be measuring. So we actually test ourselves. We're tracking it. So we go through these exercises on a monthly basis and are actually tracking whether or not we're getting better using some of these tools. And that's all about people. And that's what we think it's going to take, because we don't know exactly what the technology looks like or what that experience looks like to actually solve those problems. We have some ideas, and I'll show you some of those. But that's what it's going to take to build a team and a culture to actually go after some of these innovative ideas that we're talking about. So I'm going to quickly go through this, and then I'm going to actually just show you a video of what our recent venture has been. But how are we different than the market? There are the 3 things that we've really decided on. One is taking a more holistic approach. If you talk to millennials about what's keeping them up at night and what's making them ill, it's not insurance, it's budgeting, it's savings, it's taking bad advice. And when you have a family that is expecting more expenses and has like maybe $300 to their name in their bank account, you need to help solve that problem in addition to protecting some of those bigger things. And that's what's going to gain trust and build a long-term relationship with a new market. And I think the other aspect is that we're all human, and we're not numbers, and our lives aren't numbers. And we're taking a more holistic approach. So it's not just practical. You've got to think behaviorally. I have habits that I don't like, and I need to change those. Emotions. So I don't make every decision based on a number. I make it on what I feel sometimes. And then spiritual and culturally, those influence my values and how I make decisions. And you need to tackle all of those to really understand an individual and help them. Personalization, we've learned this over and over again. We've tried to put together so many linear experiences of content, and we constantly get, this wasn't right for me. You need to recommend something to me. And this is where I think a lot of these data, this new technology around data and understanding and using that to personalize an experience is really going to be key, because that's what our users are expecting, that what we give them is exactly tailored to them based on everything we know about them. And then long-term relationships. It would be really great if I was able to say that we went out there and we attracted individuals that wanted to buy our current portfolio of solutions online and we sold it to them. That doesn't always happen. And you really need to invest in a longer-term relationship with potential members in order to be there when they actually need some of these solutions. Now we're actually going to key up a video here of what we call Together, which is our digital love and money coach, which we launched in beta about 3 months ago.
Our faith tells us that a 3-stranded rope isn't easily broken. And it's true. We are better when we're together. But did you know a striking 88% of young couples say money causes problems in their relationships? That's why Great Peak, a not-for-profit membership organization of Christians, created Together, a revolutionary financial platform built just for couples. Our goal is to help you live your very own success story. And it all starts right here. Just answer a few questions to get started on your journey and discover what really motivates you. Then move on to the next chapters. Navigating the ever-winding road of spending and saving. Finding real-world advice on paying off debt. Protecting the ones you love so you can live with peace of mind. Together was created with input not just from financial experts, but experts in the fields of relationships and compatibility. Because it's not just about cold hard cash. In fact, your relationship with money has less to do with how much you have than it does with who you are culturally, spiritually, and emotionally. Sign up now to access an array of activities designed to strengthen your relationship with money and with one another. Are you ready to start living a life of confidence and generosity? That's the story Bright Peak can help you write. Sign up now for Together. Built for couples, not for profit.
Cool. So that's our big bet. We don't have it right now, and we're working on it, and it's going to look very different than that in 3 months, 6 months, and a year. And it will all be around really building out these three things. The last thing is that I want to talk a little bit about insurance, and that's a product that we offer, term insurance, disability insurance in our market. And when someone gets to that stage to take action, we need to make it a lot easier to actually do. And really, it is about creating a better purchase process. 12 days on average to get a policy is ridiculous. We are investing in automated underwriting, and we want to get that down to an instant experience for life. And that's a huge challenge for us with regulations and things like that. But we actually launched about a year ago a very minimum viable product to test it out. Would people actually buy? And over about a 2-month period, we went from 0% of our sales, 100% over the phone, to over 60% of our sales being digital. So there's a desire to do it digitally and make it as easy as Amazon. Then I would say always embrace new channels. We communicate with our potential members via chat and text, Facebook Messenger. We created an Alexa app literally in an afternoon, we just coded one and threw it out there to see if people would actually use it. And it didn't meet expectations, but actually people downloaded it. And you've got to just keep experimenting in these new channels to really understand how to solve the needs and meet your potential market where they're at. And then be transparent and genuine. I tear down so many of our competitors like life insurance purchase processes, and why is it so hard to even get a price for a product in our industry? That's ridiculous. And we hide things, and it's really confusing. And I think as a mutual, Fraternal Benefit Society and a mutual, that it's our job to be transparent, and you should leave with a better understanding. And we should be really clear and put more decisions into the consumer's hands, because that's what they're expecting, and that's what we're going to need to do to reach this new market. So I'm over time, and I will answer questions and love to talk to you more about any of this after the session. Thanks.
Thank you, Alec. Actually, I like the part you are changing yourself. Was it difficult for you?
Excuse me?
I like the part you are changing yourself, in your company. That was difficult.
Extremely difficult. And you can't do this overnight. I think we've been at this for years, and it takes a lot of practice and holding each other accountable. And so if you do want to really change your model, go after some of these new innovations, you should start building that team now and having them build some of these mindsets. Because everything else, the needs will change, the problems will be modified, the technology will change, and how adaptable your team will be how you win.
So you invest on training your employees, and you try to do your best.
And we're not building everything. There's a lot of great partners, and the last 2 years has been amazing for us because InsurTech has taken off, FinTech, and there are a lot of software, SaaS solutions out there that can help us do and create these new experiences, which we didn't have 5 years ago. And that's really cool. And so being agile and being flexible and building your framework that way will help you grow.
Okay, so you are a good example for us. So happy to have another woman in our panel, Mrs. Emma Logan. So Emma, will Boss Baby buy insurance from you?
Thank you. Thank you. So hi, everybody. I'm Emma Logan. I'm from Deloitte Consulting. Deloitte provides management consulting services as well as tax, audit, financial advisory to public and private sector clients spanning multiple industries. We serve 4 out of 5 of the Fortune 500 companies in more than 150 countries with over 25,000 professionals, I should say. I advise insurance execs. So my focus is on insurance, on why and how to successfully transform their businesses. So I'm delighted to be here today. I'm on my front page, that's fine, to talk to you about the forces that are transforming the insurance industry. These include mega trends, political, economical, ecological, and in particular, social and technological. So from the changing customer expectations to exponential advancements in technology that we can no longer ignore. So the session today is themed around engaging with customers in this new digital world. So I've chosen Boss Baby. Hands up, who's seen the film? You seen the film? Move some blood around? No? Well, Boss Baby, you don't need to have seen the film for it to be relevant. My point, in short, is the customer is boss. And babies of today are the customers of tomorrow, and the customers of today are already very different from those you're used to. They expect much, much more from you, and they're starting to get much more from new insurtech organisations entering the insurance market. So how are you going to ensure that Boss Baby buys insurance from you and from your business? Now, the picture here is of a report that I don't think you've got on your desks, actually. I was going to be on the tables, but there'll be one outside with the picture on the front. But I'm drawing from this in my presentation today. So at Deloitte, we believe that, oh, you have got it, good. We believe that the greatest impact of digital disruption is likely to be felt in the insurance industry, which is why I find the sector so interesting. Only those insurers that can grasp this opportunity and keep up with the pace of change are going to survive. So I'm drawing a lot of my content from this report. It's called Turbulence Ahead, the Future of Insurance. This report came about after we published with the World Economic Forum on the future of financial services. And what the report does is it speculates on new business models in the future for insurance that will emerge. It sets out some of the trends and forces that are changing the customer and also the market, and it provides some advice on how to win in the future. So today I'm going to touch on some of these trends from both inside the industry and outside the industry, and give you some insight into how others, especially new insurtech companies, are taking advantage of technology and digital disruption to access today's customers. I'll end with some safe bets that you can take away of how you're going to win in this challenging new digital world. There'll also be a vote at some stage, so if you've got your apps ready, that would be helpful too. So the forces transforming the industry. This diagram's in the book, so you can get to see a bit more of the detail, but to contextualize these forces, it's worth stating the obvious, I think. Insurance institutions aren't known for chasing trends. I think that's fair to say. And maybe we wouldn't want them to be either, but transformative forces are there. So this diagram we've got in the middle, we've got the changing customer expectations. The pale blue circle on the outside represents those innovations surrounding the industry, impacting from without. So examples, and we've heard lots of them already today, the sharing economy, which we talked about earlier, and I'll touch on as well. Self-driving cars, Internet of Things, social and big data, machine learning and artificial predictive analytics, artificial intelligence, distributed ledger or blockchain. I'm not going to talk through all of them, we don't have time, but just starting with the sharing economy, made famous by platforms like Airbnb and Uber, enables owners, as we heard, to commercialize their personal property, to make use of spare capacity, whether that might be an idle tool, an extra seat in their car, or an empty bed, And of course, it's technology that's enabled this sharing economy to happen. And it's an industry expected to reach, I've got a $335 billion. I think you had an even bigger number before by 2025. There are going to be gaps in providing products that suit the new business models that emerge. Incumbent insurers will face competition from new entrants to come up with those products, but it's a growing industry to think about. The next of our transformative forces from without the industry are social and big data. So for me, this sits at the core of all the exponentially progressing technologies that are disrupting our world. Behind the scenes, cheap memory, high-speed algorithms makes short work of the sort of computation and analysis that used to take weeks to complete not so long ago. And when it comes to social data, social media users have risen by 176 million in the last year. Facebook, Messenger, and WhatsApp handle 60 billion messages a day. Google processes 100 billion searches a month. These are massive numbers, and that's an average of 40,000 search queries every second. So the implication for insurers, using these data and analytics about potential customers, insurers can reveal unmet coverage needs, and that, of course, leads to new profitable revenue. And we also have, I think it was mentioned earlier in the day, the ethical question around that. How do we deal with that? A quick quiz. This one is not on your buttons. This one I might make people stand up for, actually, because you've been sat down and just had lunch. So out of 16 industries, how highly did customers rank insurers for online experience? So A, first. Stand up, please, if you think they were first. Anybody brave enough to think that insurers came first for online experience? No. Okay, B, 10th. No? C, 14th. Well done, sir. Stood up. Okay, a decent proportion of you. And finally, D, last. Now the blood's flowing. You are all very cynical. The answer was actually 14th out of 16. So you had a much lower view of the world than the ones polled. One of the big issues that consumers complain about is the amount of time it takes and the amount of questions they need to answer to get a quote. So I wanted to share with you a great example. It's a company which has combined what we were just talking about, big data, with a really slick user experience to access new customers and also run at a very low cost. So this is Sonnet. Deloitte partnered with Economical Insurance, which is a Canadian, 145-year-old Canadian old mutual. They wanted to break into the millennial market, so new customers. We created a new digital experience, a new digital insurance company, I should say, on the edge of their organization, so it's a separate company, with the intent to change the way that Canadians felt about insurance. So the customer, in this case, only needs to answer just a handful of questions. I think it's about 5 questions as opposed to 20 plus. And what it does that's clever is it takes your postcode and then uses big data to find out the answers to questions like, how many bedrooms does your house have? Is it wood structure or brick structure? So these answers are out there. There's no reason for the customer to answer them. And I'm going to now show you the video. Play VT, please.
Is the smart new insurance done completely online? Just tell us a bit about yourself through a few simple questions. Our data-driven analytics do the work for you, providing the right coverage at a competitive price without the guesswork. Next, choose one of 3 customizable packages and tailor to your heart's content. Finally, wrap it up with flexible payment options, letting you choose frequency and timing of your payments. You can update your account or policy instantly online, anytime. And that's it. Sonnet makes insurance straightforward and fast because you deserve better.
So the other great thing about this organization is they've got a very tiny staff. Their underwriting is all algorithms. So they've really managed to make it very low cost for them in the way that they run it as well. So a really great example. Back to our wheel. So we talked about innovation from without. We're now talking about emerging innovations from within insurance. So a few trends here. So the expansion of digital intermediaries is one. Episodic insurance, alternative capital, and peer-to-peer insurance. it's worth saying that innovation looks very different today from what it did just a few years before. Back then, most innovation was coming from incumbent institutions aiming to enhance product features or the customer interaction. But today, we're seeing a large influx of new entrants to really test the boundaries of insurance. We're seeing global insurers, having learned from the disruption taking place in other financial services segments, they're embracing these new entrants and providing them access to products, to data, and to capital. So for expansion of digital intermediaries, you can see the impact here on the insurance value chain we've drawn up here in the areas of research and development, sales and distribution. In the UK, continuing with digital intermediaries, a Deloitte YouGov survey showed that 58% of GI customers use online aggregators before buying a policy. But new digital intermediaries are also entering the market. So we see online aggregators like mBroker, Next, Insuron taking on commercial insurance, a market where customers' digital needs have been very underserved. We've also got Brolly, NIP, which was recently merged with Comparu, it's in Netherlands, Cover Wallet, which analyses customers' insurance needs, portfolios, and options similar to an in-person broker, but online. The next trend I wanted to talk about was peer-to-peer insurance. Now, these networks, most of which are new entrants to market, they enable customers with similar insurance needs to connect with one another and pool their premiums online. So group members benefit, obviously, from lower premiums by promoting risk-sensitive behaviour, such as absorbing small claims or driving more safely. And we've heard about that sort of model today already. It looks very similar to the mutual aid societies of the past, of course, but with a much more modern digital twist. And so really what they're doing by offering the possibility of lower costs and greater transparency, peer-to-peer networks may be able to draw certain segments of customers away from our traditional insurers. A couple of examples, Guevara, one of the peer-to-peer consumer insurance pioneers, they've actually recently closed their doors as of last month after unable to fully capitalise. So there are winners and losers in this game, and it's interesting to see you have new entrants and they close up shop. But another example is Friendsurance, which is a German-based organisation. They're doing very well. They've just launched their first product in Australia with a cashback bike insurance offering extra benefits. So we're seeing these new entrants doing extremely well. Next, I was going to talk about episodic insurance, which impacts the pricing and underwriting area. So another way of thinking of it is on-demand insurance, and we've also talked about this earlier. Today's digital customer expects products and services on demand, so conditioned by apps such as Uber, by Foodora in the US, Deliveroo in the UK, and at the same time, with the sharing economy, it's made pay-as-you-go consumption the norm in the younger demographics. So enter a new generation of insurers in this space, Metromile, the Chinese firm OK Chezian, Octo, they all offer insurance based on usage. So for example, driving distance or duration. Trove offers on-demand insurance coverage by single items for specified durations. I think you saw the video yesterday. And then the last one I've got on here is Cover, which lets customers buy auto coverage by the hour when they borrow their friend's vehicle with a mobile app. And I was going to show you a video about Cover, which is next.
I just came to inquire about your gym membership. To be honest with you, all I want to do is like a bit of abs and legs. Can I pay like for machines, like just pay for per machine or per time?
No, it's a whole club.
Oh, I was wondering, help me. I only need one Bailey. If I was hoping I can just buy one of those instead of the whole packet.
You can open it, sell one.
It's the same with paprika. If I only need like a teaspoon of it, do I have to pay?
You can sell one spoon.
Hello, mate. Can I just get just a single chip?
Small, medium, large.
One small. But how many do you get in that though? A little bag. What, like 12?
Yeah, something.
So how much just for sort of like 10p for one then?
1990 minimum, yeah.
I'm just wondering what the possibility is of me potentially just buying one single episode of House of Cards. Do you just do a one episode plan? No. Do you just do like a handful of parsley rather than getting, because that will go off, and definitely no for the bay leaves. Is there any chance that I could just buy the sports section?
Okay, for this
Do you do it extra small or like a micro small? Can I get a 3-inch sub?
6 inch.
Yeah. So can I get half of that? I'm having a big dinner. I just need something to tie me over. Is that the best price on it? Could I get it any cheaper if I didn't like take any certain parts? I never use F9 or F12. Can I get rid of those, leave those with you, and that's... What about the chicken nuggets?
6 inch.
One?
So I like that. Very, very good. So I think they've slightly laboured the point there about episodic and microinsurance. But you can see these innovations are sweeping away traditional policies, replacing them with on-demand, micro-duration coverage with the user experience making it really frictionless and convenient using mobile phones, changing not only the way insurance is consumed, but also the way that risks are distributed. Okay. So, in conclusion, the world is changing, insurance is changing, the customer is changing, and so is the competition. Incumbent insurers need to think about what they must do to win in this new landscape. So happily, you have a few safe bets, which I'm going to share with you. Ooh, next screen, here we go, a few safe bets. First of all, seamless digital channels to deliver valuable insights or distribute insurance policies when customers need them. Number 2, access to data that helps price risk and also generates new insights for you. Thirdly, partnership strategies for the next generation of digital intermediaries or commercial entities representing customer demand. And finally, scale and operational efficiency to counteract any lost predictive premium and also to create new value. So finally, fingers on your mobile phones for the final quiz. Please put your fingers on your buttons. Bearing all of that in mind, do you and your organisation have a plan yet to ensure that your business is one that Boss Baby or customers will want to buy insurance from? So press A if you think, yes, we have a plan, we're executing on it, we're insurtech experts, and we're waiting for the rest of the world to catch up. Press B if it's in progress, you're hearing a lot of talk, maybe not so much action yet. And press C if there's no plan yet, if this is all new, you're starting from scratch, and that's why you're here and you're frankly rather worried. Let's see how the answers come in. You all voted? Okay, so there's our answers. So that's not bad. So nobody, well, there's a few people who are claiming to be experts. I think maybe some of them sat at the front here. 67%. We feel like we know what needs to be done. We think we've got a plan in progress, but action yet to fully happen. So that's interesting. Thank you for voting on that. Okay. So to close, I've skipped through a few of the trends, and I really have just scratched the surface. So I do direct you to that report. It's got a lot of really good stuff in it. The forces from within, the forces from without, creating space for new entrants to this market. Another thing in the report that I think is worth highlighting is how the business models are likely to change in the future. And we do envisage and speculate on some very interesting changes. So, as we state in the report, Deloitte believes that there is real turbulence ahead for incumbent insurers. Real change is afoot, but there are also opportunities and steps that you can take to ensure that Boss Baby and his gang buy insurance from you. Thank you.
Thank you, Emma. Thank you. So we are here to deliver the message that mutuals are the only way for insurance. Do you believe that mutuals have an advantage of...
New entrants? So I certainly don't think that new entrants are the only way for insurance, but I do think that the incumbents need to change. But we're seeing change happen. I think that's the good thing. What I'm seeing as I speak to executive teams in the incumbent organisations is a real willingness to embrace new ways of working, these new technologies, and start to learn from some of these startups and work in partnership with them. And I think that's the key. I mean, we spend a lot of time running partnership programs with startups and with incumbents where we bring them together and they actually learn, importantly, how to work with a startup, because obviously big organizations that have got their own processes are very different to little startups. But certainly there's a lot of benefit in it for the startups because they don't have the, all that old knowledge of how things really work. They don't understand the regulations. So there's a real benefit there. I've seen some great examples of where the incumbents come up with, this is my business problem. Now, startup, how are you going to help me solve it? So, yeah, so positive.
Thank you. It seems that we don't have much time, so we'll come up with the 2 questions. Please take your apps. Question number 1. Currently, on which part of the customer experience does digital technology have the biggest positive impact? A, product/service information. B, quotation. C, purchase and policy download. D, claims. E, service including renewal. F, other. We have some seconds for you to vote. You guys, you can vote as well if you have your smartphones. So it seems we have the result, products and service information. Interesting. So the second one is in 5 years' time, in which part of the customer experience will digital technology have the biggest positive impact? A, product/service information. B, quotation. C, purchase and policy download. D, claims. E, service including renewal. F, other. So the result seems that it's the purchase and policy download. It's not a surprise. So we have to say goodbye to Thomas. He has his flight.
Yeah, I've got my train.
Okay.
So,
have a nice trip.
Have a nice end.
Thank you so much for being here.
Sorry.
So thank you for the outstanding job. And please.
Let's, we'll give them another round of applause. I think that was just a round of applause for Andrea.